Let's take a look at your market news now. U.S. markets were closed yesterday for a public holiday. In Asia, markets dipped at the close as investors searched for clues on trade. In Tokyo, the Nikkei fell 1.2% after 3 days of gains as a solid yen failed to soothe exporters' concerns. However, in Hong Kong, the Hang Seng ticked up 0.5% as traders returned to work after the Lunar New Year holiday. Markets in China still closed for a public holiday. For more on the markets, we're going to cross to Francis Hurt, who's at the Johannesburg Stock Exchange. Good afternoon, Francis. Over to you.
Thank you very much, Nzinga. And not a great day. For 2 days in a row, we've seen losses on the JSE, down more than 1.5% at the moment. But it must be said that global markets are also coming off after a great week last week. And we were, of course, also riding the wave of euphoria about the political change in South Africa. You'll see behind me the rand battling a stronger dollar again. So it's moved further away from those 3-year highs that we saw last week. I'll get some analysis for you now. First, let's take a quick look at European and local markets. Great, as always, to be joined by Lee Riley from IG. Thank you for being with us. So is this something specific to the JSE? We see a lot of stocks in the red, or are we just being caught in sort of the depressed mode across the world?
Exactly that. So a bit of a stronger run-up last week after the rebound from the what seemed like an almost catastrophic pullback at the time. Volatility's come off a little bit. We've seen the VIX drop below 20. Asian European markets were the leader out yesterday. Bit of a pullback there. We've seen a bit of a drop in commodity prices with the strength in the US dollar. And we also have a Lunar New Year in China and President's Day in the United States yesterday. So volumes have been quite constrained. We've seen muted movements. So maybe just a bit of a break in the upward momentum that we saw from last week.
So stick with commodity prices, because that may be affecting a lot of the red that we see are the miners. We saw BHP results come out today, and they're down more than 4%. But Amplat's looking good yesterday. So what sort of picture are we getting from mining house results? So
in general, fairly mixed, but leaning more towards the weaker side. We also had Imperial and Discovery coming out as well. And just given the current market dynamics, most of them you'll see across most of the other resource counters, the Goldfields, the Anglo Gold Ashantis also coming off somewhere between sort of 3 and 6, 3 and 7%. So yeah, I mean, in line with expectations, no great shakes. I think kind of everybody was kind of expecting us to get the numbers that we got from Bulletin. There's still the San Marco disaster, which is a big question, how they're going to continue to deal with that. In other stocks, we've seen the reinstatement of dividends with Amplat. And then on the flip side of that, the likes of Imperial not paying out a dividend despite the fact that they had record revenue holdings, or revenue earnings at least. So a bit of a mixed bag of results coming out. It is a very busy week from an earnings point of view. And then the tail event risk towards the back end of the week for most international markets is a focus on the FOMC minutes coming out on Thursday. And then there's a little bit of banter around who's going to be replacing Mario Draghi in the ECB come October time. And we might see a further reshuffle there from some of the other staff. Most replacements coming through from allegedly Spain, supposedly.
So what does that mean? That we could see markets in the red, even if the political changes at home are received well, even if the budget is received well?
Yeah, it's very difficult to shift. I think what you've got to do is look at the underlying narrative, which is where are we in a more macro sense, or where are we in a more upward momentum sense. Even if you take into account the 10% decline in markets, we are still in the longest and largest bull market in history. It's going to take a lot more than that to shift things to a far more negative side. Could we see an increase in volatility led by federal banks or by central banks offshore? Yes. Is borrowing going to be an issue, particularly in the United States? Yes. Locally, we're obviously undergoing a huge amount of change. So the immediate focus for traders, I don't think investors, but certainly for traders, will be whether there's any great shakes with the budget tomorrow.
So what are the market movers there potentially? VAT, good or bad? What else are you watching in that budget speech?
So yeah, we'll be looking at, in particular, I think VAT, and then also where the...
Are you expecting VAT to go?
Yeah, we'd expect VAT to increase marginally 1 to 2%. It doesn't affect your very lower LSM constituents, but certainly it affects everybody in South Africa. There was a slightly more positive side to the amount of tax that was collected. So there is an assumption that the deficit could narrow to around 3.5 to 4%. But that remains to be seen, and it's all a bit of a thumbsuck at the moment, given that we don't have any other information to go on for tomorrow.
How would the VAT increase be received? You're saying it affects everybody. Does that mean maybe a dampening for retailers, for banks, things like that? Or will it be taken in South Africa's stride, given that we need more revenue? Everybody knows that. Yeah,
there's a couple of things I think we need to consider when we look at this, and I don't think we can look at one thing in isolation. I think, yes, it will definitely affect people's appetite for expenditure and for spend, but if we see a more positive outlook as a whole going forward, and we start to see an increase in nominal growth, and we start to see upgrades from ratings agencies, if the budget is in line with what they're hoping for, maybe we see a very bloated cabinet be trimmed down and some of the positions be amalgamated or consolidated. And if there's a very clear idea around where the money for free education is going to come from, then that overall could mean that we're in a slightly more positive position.
Okay, so you've touched on, I think, my last question. If the cabinet reshuffle is well received, if the budget is well received, does it look like President Cyril Ramaphosa is making the right moves that may stave off the downgrades that we were expecting? You were even talking about an upgrade. Yeah, well, I mean, it's the first time that we've seen it from Fitch this week already. It was in the news yesterday. But the underlying is that we've got a long road to go. And part of it is political stability. Part of it is galvanizing a very fragmented, dominant ANC party, where we've had two very, very different camps. And then it is obviously also putting in place savings or means with which to appease those ratings agencies that allow us the time to put things in place for the next 5 to 10 years, because it's not a 1 to 2 year story, unfortunately. We had Eskom, which was a month away from default, essentially. So that is our largest utility provider, and that's not something that's going to go away. Growth, yeah. It's not going to go away, and it's capped by that. We were discussing it earlier, and that caps our growth, because our industrial production has come, or our industrial manufacturing production has come down. Our resource counters are producing less metals than what they were. So the moment that goes up, that puts pressure on that utility, and that means that they have to increase their output, which means that they have to incur further costs. And despite the fact that they've raised the rates that have come in from retail and commercial, they're not making money. Very quickly, Malusi Gigaba, should he stay finance minister? To my mind, I think you've got to ask yourself this question. Every time he's met with a ratings agency, we've gotten a downgrade. So what does that tell you? All right. Thank you very much, Lee Riley from IG. Some analysis on the markets, well in the red for a second day. But that's a wrap for now from the JSE Chair.